chai and crypto. What about you guys? Want to introduce yourselves?
How's it
go ahead,
going? I'm Bruce
Bruce.
Fenton. I've got some tea here in my Bitcoin mug.
Oh, wait. Jared says, start again. It didn't load. Starting one more time. Take two. This is take two of the third CoinMarketCap's Cha-Cha Chat. I'm Molly Jane. I'm a content manager at CMC, and I'm here with two guests, or one guest and one host. And we all have our tea because Cha-Cha Chats is all about contemplating the things in life with a cup of tea, and then also trading cryptocurrencies. So let's start again with your introductions.
Hi, I'm Bruce. I have my Bitcoin mug and a little bit of Earl Grey here.
Thanks, Bruce. Jason?
I am Jason Deane, and I've got my crazy Captain America mug. In fact, this is not even mine. And I've got some green tea today. So we thought we'd go for that.
So for those of you that don't know, Bruce Fenton is from the Satoshi Roundtable. He's also the CEO of Chainstone Labs. He's the founder of Atlantic Financial. And then on the top of my screen, we have Jason Fenton, who is an analyst at Quantum Economics. Yeah.
Jason Deane. It was close enough.
What did I say?
You got us mixed up
You know
there.
what, don't tell me.
We'll watch it in the playback.
Oh gosh. Okay. Well, let's just get started then, and I'll just not mess up anymore.
So good morning. So Jason, you have your charts, and you were going to go over some Bitcoin history with us.
Yeah, basically, I mean, first of all, guys, just want to say thanks for having me here today. I'm really grateful to be here, particularly with you, Bruce. You've done a lot of good work for the space, and I do follow some of the stuff you do, particularly Jimmy Song and Max Kaiser, all those guys put in the same kind of category. So I do like to keep up to date with what you're up to. Although I wasn't sure whether we were going to see a beard today or not, because obviously that comes and goes as it does over time. I'm, as you know, primarily an analyst at Quantum Economics, and that's Matty Greenspan's outfit. So you probably heard of him. I do consult to other companies in the space as well, but the truth is I'm happiest really trying to figure stuff out. So that's looking at numbers and trying to match it up with kind of real world scenarios, and see if it kind of makes sense really. And that's especially true of Bitcoin. I mean, obviously I follow other cryptos, and as you guys know, it's pretty much a full-time job just trying to keep up with what's going on right now, because it's an incredibly exciting time. I'm also a miner, so I've got an operation in Siberia with a company out there. And so obviously I'm interested in the kind of technical side, the numbers that run with that as well. So normally when I do some analysis, I like to write about it, and usually in detail, quite often tongue in cheek. And that's kind of, if you want to find some of that stuff out, I'm at Medium, so it's medium.com/@JasonAdeane. And but just the time I'm podcasting, doing stuff like this, stacking sats, of course, and most of all introducing new people to Bitcoin. And that's kind of my thing, and that kind of led me into thinking today, how can I kind of marry those two things together? And I normally do that through webinars, presentations. Remember the days we used to do live presentations? Well, hopefully they'll come back at one stage. Writing, and of course, my second book actually is called How to Explain Bitcoin to Your Mum, which was inspired by the very act of trying to do that a few years ago, and it didn't go well. I mean, she thought I was running a multi-billion-dollar scam from my house in Wokingham. And I didn't know whether actually to be flattered or terrified by that thought, but so that's kind of where it is. So I wrote this book for her, and that's kind of how I ended up going down this path. So, of course, as an analyst, I love numbers. I love to look at charts. I'm always trying to work things out. Technical analysis has a little bit of a limit, I think, with something like Bitcoin, because there's so many things that can happen, and I can really go down a rabbit hole if I start on something like this. So I thought, how do I match the two together? So I decided just to keep it kind of simple and kind of have a look at the past and see what we can assess for the future. So let me just get my little screen on here. I think it's that one.
While you're loading it, I wanted just to tell everyone watching that if you want to ask a question to any of our guests or myself, although you probably don't want to ask me anything about crypto trading, you can go to coinmarketcap.com/chat, Or you can go to coinmarketcap.com. You can click on the little chat icon and you can find the Cha-Cha chats and post your questions there, and I might be asking them later on. Yeah.
Look at that. Transaction history.
Transaction history, and of course it's a fairly straightforward chart. You can get this anyway. This is from Bitcoin Info, I think it is, or BitInfo, I should say, saying it wrong. And of course, there's a whole bunch of charts you can pick from here. And that could have gone from hash rate, which tells a similar story, but in a different way. And of course, transactions in USD, which don't tend to trust that because there's also an inflationary aspect there that doesn't give us an absolute picture. But I thought, after playing with different charts, I thought, do you know what? The one that tells the story the most and actually might give us an indication of where we're going next is the transaction chart. It's nice and simple. It's easy-to data. And you can play with this, in different timescales. So I've selected to put the whole thing in there just so you can see where you are. And you can see pretty much where we start to get going right from the start here. These are the days of the Bitcoin Club, right? So this is where it was just a bunch of geeks. We're all sending Bitcoin to each other. I say we, I wasn't included in that point. I was a little later on. And then, of course, it's about June 2011, wasn't it? We had Mt. Gox happened here. Bruce, were you... I knew you said involved with that. That's the wrong word, isn't it? Yeah. Were you around on the scene at that point?
Yeah, I was there during the rise and fall of Mt. Gox. So
okay.
The early people remember how hard it was to buy Bitcoin. I mean, you had an exchange, but it didn't work like exchanges now. It was a very like a 2-week process to get your money in there. It took a lot of steps.
Well, and also it took a lot of balls, frankly, because in those days, it really was very much wild west, because you weren't quite sure where your money was going to go and whether you were going to get your Bitcoin. Let's face it, it was quite a mess. And that was still the case sort of around here when I first started sort of poking this. I was terrified, actually, of buying Bitcoin. And I thought that was a nice point in itself, because that's so much not the case now. You've got real good confidence with any sort of reputable exchange that you can do that, and you can do it very, very quickly. So I just thought that was an interesting point on its own. And the other reason I like this this transaction chart is obviously it tells the story after Mt. Gox, obviously, not much going on for a while because everyone's kind of in shock and sulking about it and not quite sure where it's going to go. Things start to build up. I'm skipping through a little bit because I'm just looking at my little clock at the side here, until really we get to this next big peak. So there's a lot of development, lots of news. We're all familiar with what was going on here. And then, of course, we get to our big crazy time, which was the big peak, end of 2017, 2018, when every man and his dog wanted some Bitcoin and the price pumped. Now, obviously, in retrospect, we know that was a bubble. Of course we do. Some of us kind of suspected it might be, but at the same time, we kind of hoped, well, maybe this is it. Maybe this is the thing actually really getting the adoption. Of course, with the data we have now, we know that was nowhere near the case, but it was just a bubble. And then, of course, we get our everyone gets wrecked pretty much, particularly the guys who came to this point. And basically, it's a period of sulking for a while. And then we've got our peak last year, which obviously was, we can sort of see the transactions build up then, and building right up. So you can see, unfortunately, it's all a bit compressed and there's a BTC right in the middle, which is a right pain. But that is obviously around the build up to and the fall of the halving. So there's a lot of transactions coming up there. As a miner, of course, we did see that directly on the kind of the back end of the network. And of course, we're seeing a build up in price now. So we're seeing these transactions. Now, the kind of reason why I mentioned all of that is just a very quick summary of all those years of the transactions here, is because it is very clear still that there is a correlation between price and transaction rate. And you can see that through the peaks and troughs of what is going on here. And you could argue, if you're Bitcoin purists, perhaps, that you would not expect that to happen. If Bitcoin was working properly as a currency, you wouldn't really want those transactions to move like that with price, because that's fundamentally not what it's designed for. It's been used much more at this stage as a kind of store of value, speculative asset, et cetera, And what that tells to me is that this shows kind of how early we are in that Bitcoin cycle. For people like particularly you, Bruce, and some of those, you've been around a long time in the space. You've seen a lot develop and a lot happen. You think, it's big, it's happening. And then you zoom out and look at the bigger picture and realize, actually, there's still a long, long, long way to go. And I love the fact that there is so much of that story and so much of that data in this chart. So that was kind of the reason I thought, well, you know what, I'm going to keep it simple. I'm going to bring this one in and we can chat about this, because, you know, this also gives us a lovely, from a basic technical analysis point of view, this lovely straight kind of trend across, which in theory gives us an indication of where we are.
It'd be great if we could include off-chain transactions. I mean, exchanges won't share, but exchanges are doing this, you know, huge volume of off-chain in, you know, between their own accounts. And then you have second layer as well, you know, Lightning and other things, which don't have huge volume yet, but that'll be interesting to see. You know, I think you're right. Over time, if Bitcoin really works well, you won't see so much of a correlation between transactions. Hopefully you'll see transactions kind of, you know, maybe even out, and then a lot of things will be done second layer.
Well, I think that's a very fair point, actually, because, you know, the biggest limitation of Bitcoin, as we all know right now, is that transaction speed, and particularly when the network gets busy, when there's a lot of people wanting to use Bitcoin, we do have this problem. Lightning Network, you know, it looks like a great solution, looks like it really could happen, it really could work, and that would affect that, as you rightly say, and that would also affect, though, of course, where we're going with Bitcoin, because at that point, then we really do have a proper liquid currency option to something that's been used more as a store of value and speculative asset. In my view, that's just my opinion.
Cool. Interesting. Do we have any questions yet?
I have a personal one before I go to the several that we have from our audience. I'm wondering when you guys bought your first Bitcoin or received part of your first Bitcoin, at what point in this chart was your entrance into Bitcoin?
Do you want to go ahead, Bruce?
Mine was I bought it was early 2013 that I really started, you know, getting serious about Bitcoin, and I think I might have bought, it might have been 2012. I don't really remember, but it was I do remember sort of April 3rd 2013 was when I really, you know, really was serious about it. That's when that's when sort of my life changed and I decided to totally focus on this.
Well, I have to say my story is quite similar to Bruce. It's just shifting down here a bit, because I quite often talk about the fact I've read about it properly in an article somewhere around here. I can never be sure if it's the end of 2013, 2014. I thought that's interesting. I mean, I misread it as Britcoin, actually, and read about 3 articles before I realized I got that wrong. And then I thought, this is amazing. Started looking into it, couldn't buy it, and gave up, got terrified. Sort of poked it with a stick, kept an eye on it for a little bit, until it was right over here when I actually parted with money and got skin in the game. But then, like Bruce, I just went, that was it. So I sold my businesses, and from now on, my focus is purely Bitcoin and the industry around it. So it was quite late. What about you, Molly?
I started working as a crypto journalist in January 2018, which is when I also got my first salary in Bitcoin, when Bitcoin was $20,000.
Oh, Matt.
So.
Okay. Should I come out of this chart, Molly? Does it make it easy if I come out of this chart?
Yeah, you can come out of the chart now. I'll start with the first audience question. So this is from the CMC chat. And like I said, you guys can go on to the chat. You also can go on to YouTube where this is live, on Twitter when it's live, and throw out your questions for me to ask. So the first question is from Bitcorns, who says, Jason, why would somebody mine versus just buy Bitcoin?
Oh, fantastic question. It really is. And this is something that miners do discuss quite often, actually. There's a lot of forums and channels where we have this. If you do the maths, over time, it works out quite well. I mean, I can really go off on one on here, and I'm not going to, but the point is, think of mining as a kind of dollar cost averaging solution. Okay, so if you, with the latest generation machines, I run a lot of M20s, for example, and they are, at the moment, of course, quite profitable. So I could, if I chose to, sell the Bitcoin that they generate, to cover the mining costs and keep the rest as profit. I actually keep it all in Bitcoin and pay for my fees, my electricity in fiat. But that's the broad answer. There is a balance, of course, in terms of buying the equipment and offsetting that cost, because mining equipment isn't cheap, and extrapolating that cost out over time and getting that back. But really, beautiful thing about mining is it's all about the numbers, and you know exactly what those numbers are, of course, because Bitcoin is so precise, and you can measure the dance between difficulty and hash rate all the time. So in my view, it's always better to mine over a long period.
I don't know, Bruce, have you ever thought about mining Bitcoin yourself?
Oh yeah, yeah. I've thought about it. It's a tough game, mining. I think everybody's tried it a little bit. I've never tried it in a serious way. I always thought that my destiny was on a different path, but it's something you want to be really careful of. Most people, when they first start, get interested in mining, and then those who are lucky sometimes stay. But a lot of people get wrecked. It's a risky thing, but over time, if you're good at it, you can do better than you could if you just held. Especially if you're clever about how you do your taxes, or you have a good competitive advantage like cheap power, or good access to good hardware or something like that.
So we have another question coming in from YouTube from Dominic Lozardo. CZ thinks Bitcoin will eventually be phased out. Thoughts on that? I guess to both of you. Yeah.
Phased out as in I don't know. I don't think it'll be, I don't know. I hope not. I think, I mean, I suppose anything will eventually be phased out. The real question is what's going to happen over the next, 1 to 3 decades. I think it's probably the most interesting to me, because it has the most impact on us. But there's certainly a lot of new currencies coming along. Bitcoin has a lot of properties that it will be hard to duplicate, especially if somebody comes along with a new thing. And anything that is going to have any kind of traction is going to be really hard to get. It's hard to build a network like this. So it is sort of unique in the digital asset space, and it has a unique space. But over long term, I think every currency gets wiped out for better currency.
Yeah, and I think that's a fair comment. It does come up quite a lot. Actually, I get this question, and you probably do as well, Bruce, in some format or another. And my view has always been, there is the whole first mover advantage. I know someone always comes back and say, well, what about Facebook and MySpace and blah, 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 and all that kind of stuff. And they are fair arguments in certain situations, no question about that. But at the same time, Bitcoin's network now is so powerful, it's so secure. This is very, very, very hard to replicate. And I do accept there are currencies that are technically better in terms of their software operation and bits and pieces, but they don't have that presence or perception of value. And that's a problem when you're dealing with a currency. So Bitcoin, I don't think is going anywhere in the near future. Again, just my view. Timescale wise, I don't tend to think beyond a decade, because we're in an industry which is still massively new and experimental in many ways. But we kind of hope and can see where this could go. But beyond a decade, we're into sort of real guessing territory at that point, I think.
Absolutely.
I can't believe you can even think a decade in advance. I can't think about what's going to happen tomorrow. We have another question from the audience. This is from user 4621705, who asks, how do you factor in or discuss all the on-chain volume that moved to stable coins? Would Tether untether USD transaction volume from price, cause, and effect?
Would Tether untether USD volume?
Mm-hmm.
Go ahead.
Would it cause an effect? Sorry, I read the typos as if they're, fact, but I can change them. Would Tether untether USD transaction volume from price, cause an effect?
I'm actually trying to work that one out. So hang on, would Tether untether USD price?
Yes.
You mean come away from USD? So one Tether wouldn't equal one USD? Is that the question?
Tether untethered.
That might be what it means.
You know what? Let's think about that for a second. Let me go on to the next question.
Because we'll stick a pin in that one. Yeah.
Stick a pin in it.
He might.
The answer is yes.
Yes.
The answer is maybe.
No.
There's another one from this person. So he or she will get a question asked. Oh, hold on. Wait. June says, how to interpret the data since there is a lot of USD Tether volume as well on the Bitcoin transaction chart.
Okay, Bruce, you want to go ahead now?
I think I still don't quite know the question, but I don't think that the chart that that Jason showed would have much Tether volume, because it would, I mean, there's some that goes from Bitcoin to Tether and that would show up as a transaction, but Tether, all the tons and tons of volume in Tether really wouldn't have much of an impact on Jason's chart there. And as far as kind of we don't really understand exactly the question about Tether, but there's a lot of.
They responded because we're live. We got what he says.
Yep,
great. No, sorry. That Bitcoin price and volume were tethered.
Okay. I think that was the point. That was kind of one of the points I was making from the charts. Okay, so Bitcoin and price were, I mean, there's definitely a correlation in transactions in terms of price is what is kind of one of the conclusions you can draw from that chart. So is the question, would it come apart? Would the two things separate?
Yes.
Yes. Yeah. Okay. So, that's kind of. It's sort of the point I was making about this kind of store of value versus speculative asset versus uses of currency. In the ideal world, you'd expect far more stability of that Bitcoin price, which would translate to sort of less movement of those transactions. So it'd be like us using, we don't use US dollars more because the value of them goes in and out, generally speaking. So it'll be the same thing for Bitcoin. I'm not sure I've explained that very well, actually. But do you want to get the point across?
Yeah, it's good. We can go on to another question. The question was asked and answered now at this point. Here's one from Borat. I wonder if it's actually from him. He writes, there are multiple countries creating their own version of CBDC. How would this affect Bitcoin?
I don't think it'll affect it too much. There's a lot of different efforts by countries and others to create currencies. There's stable coins. So Bitcoin's core value is that it's different from something that a government can create because it's not centralized. It doesn't have that central control. And anybody trying to, create something, new with central control is going to have, it's just going to have different properties. And, it may be okay. There's certainly fiat that's very useful. You could be a billionaire in fiat. But that centralization.
Well, everyone probably will be soon at this rate.
Yeah, exactly. It's one of the differences with Bitcoin, I think, is the decentralized aspect.
Yeah, I'm totally with you. I mean, just on the very basic levels, again, as an analyst, I like to go right back to kind of the roots and then try and build up from there, look at the picture. I mean, the fact with the CBDC, it is still a regionalized currency, effectively, whereas Bitcoin is your global alternative. And my kind of, I suppose my vision is, like Bitcoin is this place you can always go to. It's a way to hedge, if you like, against the complete system at the moment. And that could even be done with CBDCs as well. I think it's a fascinating thing. I mean, it's not quite, none of us are really sure how this is going to play out, but I don't think fundamentally it'll affect Bitcoin. There's even arguments to say it might help because of the ease of changing between the two. But
yeah, definitely.
Obviously, but that depends obviously on the country and the territory and their attitude to Bitcoin and, on ramps, off ramps, all that kind of stuff. So there's a lot of question marks there as well.
Central banks have never had to compete with anybody before. Now you have the ability for they're letting the fox into the henhouse, so to speak. By letting Bitcoin in there, and creating a central bank currency that you can switch with atomic swaps. People are sometimes stupid, but they're not so stupid. They're going to sit there and have inferior currency month after month, year after year, when they can just switch over to something that's a much better currency.
Going back to price as opposed to utility, this is from Bitcoins again, who asks, do you both think Bitcoin has lost the narrative in driving crypto prices? The last pump was triggered by Ethereum, and it looks like the current one is triggered by Ethereum and DeFi too. Has Bitcoin lost it?
Well, I'm not sure I'd agree that was triggered by Ethereum. I think Ethereum's price rise was triggered by Ethereum's use case, particularly with the DeFi aspects that are going on at the moment. You could possibly argue that they encourage more money into the space, and Bitcoin is kind of go-to currency. It's kind of where you've got to start on all of this. But I don't agree with that premise to start with. It's just my view. Yeah,
I think that Bitcoin. I don't think Bitcoin's lost the narrative at all. Bitcoin's narrative is different. It's not as hot and as exciting, and you're not going to see, hey, here's an announcement from the devs, and what's any new joint ventures? We in the troll box saying, hey, what's coming out news with Bitcoin? Are the devs having any announcement? Are they doing a joint venture? It's like the person with a roadside stand trying to get you to buy something, versus Walmart. Bitcoin's more like Walmart. It's just kind of there, and it's huge, and it doing its own thing, and it doesn't really care about a lot of the hype and the nonsense. So I think that's its narrative. Its narrative is different. And if you talk to the really, really serious Bitcoiners, the real OG holders that don't have a high profile, folks that have massive amount of coins, and the developers, their narrative is very much make it super hard to change, super hard to mess with, and super decentralized, very security focused. So that narrative is good, and that narrative has worked, and it so far has the highest market cap. I mean, I think certainly the Ethereum narrative is a great one too, and that will drive, I think, maybe both of them will drive. There's a lot of kind of, that more serious institutional interest that's like backing Bitcoin, and then there's a lot of excitement and corporate interest and building that's doing Ethereum, and there's all kinds of things in between with DeFi and securities tokens and many other chains and projects. So I think rising tide lifts all boats, hopefully.
We have another one from Bitcoin. Thank you, Bitcoins, for asking so many good questions. Do you both wish the pace of Bitcoin development and innovation was quicker?
Oh, that's a fascinating one. I mean, actually, it kind of alludes to what I was saying earlier, because back in that boom time, even before, it felt like it was very, very quick, and there was a lot happening, and it still does. There's so much happening. I mean, probably like you guys, I spend a couple of hours a day just reading and trying to keep up to speed, not just Bitcoin, but all the other developments that are going on at the same time. And it seems, incredibly fast. But then if you look at things like the adoption numbers, they're increasing, and more people are using Bitcoin all the time. I wrote a detailed report on that a few weeks ago, actually, called "What Rate is Bitcoin Really Growing?" And it's fascinating to see those numbers, but they're not growing as quick as people like us who are in the industry think it is, because we're surrounded by this information all the time. So when you step back and look at it, you think, actually, it's not happening as fast as it should. But you know what? I'm quite happy with the way that it's going, and the development is unfolding. I'd much rather it was a solid development that worked well and fitted the criteria. Sure, we'd all like the Lightning Network here today, but that's not going to happen. Let's make sure it works properly first and solves that part of the problem. So that's just my view.
Yeah, I think the development is moving faster than a lot of people realize. And it's not so much fast in the sense of new bells and whistles and features that are exciting. It's the kind of development that's done on Bitcoin is very much, very minute security type of things. But there's a lot. There's 25,000 commits and 738 contributors over 10 years. And they don't, you don't just make commits like they're not whimsical or taken lightly in Bitcoin. Every single change to the code is very significant. And those 738 people aren't the only ones building. There's hundreds and hundreds more who do code review and are very much a part of that process and dealing with the acts and knacks and stuff like that on the discussion groups. And then there's thousands more building like second layer, the employees of exchanges, miners, wallets, thousands and thousands more who might as well be Bitcoin developers. So there is quite a bit of development. It's just not, it doesn't come in the form of, you're not going to be adding IPFS, putting movies on Bitcoin or something like that. But you hopefully are going to have just what you've had, which is a pretty secure network that's hard to change.
And that's the way it should be, frankly.
Right.
That's exactly the way it should be.
So we have time for one more question, also from Bitcoins. And I think it's a good one too, like a summation of what we've been talking about, the future of Bitcoin, really. So Bitcoins asks, one of the problems with Bitcoin development is funding the devs. With no foundation to fund devs and piecemeal corporations funding devs through grants, what's the future of Bitcoin core funding?
That's probably one that Bruce will be able to answer better than I will. So I'm going to defer to you on this one, Bruce, if that's okay.
Sure. So I was with the Bitcoin Foundation when we did fund.
That's why I'm asking.
In the early days, it was when I joined. Before that, they were the only ones who did any funding. So when I started in Bitcoin, there was probably only 3 full-time employees actually working on Bitcoin, and they were all paid by the Bitcoin Foundation. It was the only way. There was no real money. I mean, and the only companies in the space, BitPay and Coinbase, they didn't have any money. They were just tiny little startups. So there was no real corporate funding. It wasn't even a thought. So people just contributed and put just a couple, just a couple bucks, like 5,000 Bitcoin or so to fund these devs. And then MIT took over that and funded them. But then by the time MIT did it, there was several companies who were doing development. There's people like, and now today you have Blockstream and Stripe and Chaincode and a whole bunch of others there's a lot of companies that have one or two devs, and then there's others like Chaincode that take a really pretty big view on it. And they have a lot of devs, and then they do support of the NY Bit Devs meetups, and they get people coming in for internships and all kinds of exciting things like that. So there's definitely a lot of interest, and there's a lot of interest. I mean, you take Bitfury, for example, you look at like the CTO of Bitfury, Alex, he's really, really sharp. He knows Bitcoin really, really well, just as well as any of the developers. And they have this huge company behind it. So you better believe that, a company like Bitfury is not going to, sit by and let development, die or let an error go through. And neither is Coinbase or Binance or Kraken or anybody else who has a vested interest in this, Abra and all these wallet companies and everything else. So there is a lot of interest, and particularly as you get more institutions in there, there's a lot of interest in keeping it basically what it is. And the bigger danger isn't not enough devs. The biggest danger, in my opinion, would be sort of co-opted devs, or an attack vector that comes in where you have, if I wanted to attack Bitcoin, what I would do is I would take a few $1 million and create a foundation. I'd say all the things that all the Bitcoiners would love. I'd just retweet all of the maximalists, and I'd have a developer kind of, weasel into the process and build trust over a few years, and then try and put a bad code in. But the good news is there's such a huge network that has a real vested interest. There's a lot of billions of dollars and a lot of jobs riding on Bitcoin. So there's a big incentive for a whole bunch of diverse people to protect this network, which is great.
So actually, there's one more question I thought would be interesting to really close. I know we're about 1 minute over, but I mean, from Dominique Lazardo from YouTube. He asks, how sensitive is Bitcoin to stock market moves? Just came in.
Or the correlation
I know it's like going
question.
backwards a bit, yeah.
Yeah, the correlation question. Well, again, I'm trying to compress down lots of information in my brain without going off on one. There has been correlation, of course there has. I mean, clearly you've been able to see it just by overlapping the charts on top of each other. Will it happen in the future is probably more relevant to this. And my view, short answer, no. I don't have time to go through all the reasons for that, but I do believe it is a different asset and the money is flowing in different ways. Markets anywhere in la la land right now. I mean, all these huge, keeping these stock numbers up just through economic stimulus is being mixed up with economic growth right now. So don't even start me on that one. But right now, I think we're looking at a decoupling at some point. I don't think we're there yet, but that's a very, very short answer of lots of stuff I could say. So I'm just sparing you the detail.
Yeah, I agree. There shouldn't be much correlation. There's some because of this crazy stimulus. If you have a lot of excess liquidity, or if everybody's feeling poor, one of the things I was worried about in early March, I actually briefly sold almost a bunch of my Bitcoin, more Bitcoin than I've sold before, right in early March. It was the best trade I've made so far in this space. I sold it, and then I bought it back about a week later. So I was able to increase my Bitcoin stack by 30%, which was probably one of the best trades I've done. Because it was I was so scared about this COVID thing. I pulled everything out of everything. So there can be a correlation like that. I was worried if everybody felt poor, if the market just continues to crash, and we didn't have all this stimulus and stuff, then, people might start selling their Bitcoin. To me, what's really interesting, the $100 trillion question is, if Bitcoin is used for settlement, if securities become tokenized and change, which it looks like it's inevitable, and Bitcoin becomes even one of the settlement currencies, just like it is, like Bitcoin's the currency for, pretty much all digital assets. And if those digital assets continue to be stocks and global equities, then you have Bitcoin settling some piece of this $100 trillion market. And it's not just 100 trillion. It's not 100 trillion in volume. I mean, it's more than that. It's just a mass. It's the mother of all industries. It's all the money. A third of the money in the world, basically, through securities, not just equities, but bonds and everything else. So if Bitcoin is a settlement, if those assets are digitized, and Bitcoin is a settlement for even a small piece of it, then that's really one of the most impactful things we could ever see for Bitcoin. You could see that alone cause Bitcoin to do pretty well.
All right. I mean, that's it. We're over time, and I think we answered a bunch of interesting questions, even though one of them I butchered a little bit with the delivery. Thank you guys so much for taking the time to chat with me and with everyone that's been watching and asking questions about Bitcoin. And I hope to see you guys soon on another Cha-Cha Chats with more tea.
This is great. Thank you very much for having us.
It's been a pleasure.